10 income-producing assets that will grow your wealth today. Have you ever wondered what it takes to grow wealth? You might have a few answers in mind, but one of the main areas to wealth building is investing in income-producing assets. These kinds of assets will start generating multiple streams of income for you that help compound your nest egg over time. Personally, I've been a big fan of multiple streams of income well before I even gained any interest in personal finances. Not sure where that mindset exactly came from at the time, but it always felt like a great way to protect yourself when you have money flowing from various directions. Best income-producing assets. One thing I learned while teaching myself personal finances is that you must invest in income-producing assets. Beginners and beyond must master this idea and move forward with doing so. Income-producing assets definition. Simply put, these are assets that help put your money to work and generate more passive income for you. But, what are some safe income-producing assets? What are some assets that beginners should buy? Don't worry, you are in the right place. If you are ready to take your finances to the next level and build long-term wealth, below are some of the best income-producing assets you need to consider. And remember in this first section that there is more risk in these assets. But a good investment portfolio helps balance these risks and diversifies your income. A small tip: if you are ready to maintain your net worth, keep track of your investments, and see how your assets are doing, I'd recommend signing up and using Personal Capital. Entirely free to use. Keep track of your wealth here. 1. Dividend-paying stocks. Without a doubt, the most popular income-producing asset is investing in the stock market. And you have a few options like individual stocks, mutual funds or index funds, and ETFs. What's cool about stocks is many of the companies pay out a dividend or a share of money just for investing in them. There are some major companies that increase the amount of their payouts every year too. Many stock investors like to play the dividend game to passively live off the returns. Not something you have to do, but dividend investing is also a much bigger topic that I'm not going to fully dive in here. Anyway, you can handpick stocks for dividend investing or index funds, which include a mix of companies with dividend payouts. In my rollover IRA with Vanguard, I have one such index fund called Vanguard Dividend Appreciation Index Fund, DUX. 2. Rental properties. Many millionaires have been made through owning rental properties and real estate. And people continue to build their wealth through ownership of property as well. It's not the easiest outlet and there is plenty of risks involved. But real estate can also be very rewarding. By owning rental properties, each month you can collect a nice rent check that pays down your mortgage. Additionally, you build equity in your properties, and then later you can sell your property for potential profit, pending the housing market. You can buy apartments, duplexes, houses, and vacation homes, and use services like Airbnb to make money off your property. 3. Real estate crowdfunding. While building wealth has been proven with physical properties, real estate crowdfunding sites are growing in popularity too. Instead of the hassle of needing large amounts of money up front and dealing with the maintenance of owning property, crowdfunding removes some of those limitations. These platforms do the work for you and instead you choose what real estate to invest in based on your goals. This could be a portfolio of various properties or individual real estate as well. There are a few variations of real estate crowdfunding platforms, but each offers investors a chance to get a piece of the real estate pie. Many initial investments are as low as $500 to $1,000. And some of the best ones are: Fundraise, Diversity Fund, Ground Floor. 4. Peer-to-peer lending. Something I have not personally dove into, but a popular option to produce some extra income is peer-to-peer lending. You may have come across this as peer-to-peer or crowdlending as it's sometimes called. Essentially, you loan money through one of the few peer-to-peer platforms to other people. This personal loan is then paid back with interest, thus you make money on it. It's great for those who need cash quickly because they don't have to jump through financial paperwork hoops like they would with a bank. Plus, the interest rates are much higher when they are through banks. The downside for the investor is that you are potentially relying on someone with rough credit to pay back the loan. But typically, the peer-to-peer vendor will provide risk details on any loan investments you do. For platforms like Lending Club or Prosper, average returns can be between 4 to 8%. 5. Building an online business. One of my favorites on this list is building an online business. There is a lot of potential work up front to build an audience. But once you create that audience, it can be a great income-producing asset. Plus, you can also sell it down the road as well. An online business can be anything from starting a WordPress website, buying an existing website, an e-commerce store with Shopify, Amazon FBA, or maybe a digital product you're selling, like an ebook. Many of the businesses that are created online can become relatively passive. Meaning at a certain point, there is not much upkeep needed to continue a flow of income for you. But do note that there can be plenty of upfront work and time to make this happen. But the money you make can be an added bonus and even potentially life-changing. 6. Owning your own traditional business. I separated this out from the previous section as traditional businesses are a bit different from online businesses. However, they are just as effective as an income-producing asset. And you have a wide range of options here, but just to name a few. Coffee shop, laundromats, car wash, bar, food truck. However, some of these businesses can take plenty of effort and hard work. And others will require less time and be low maintenance to maintain. Additionally, there may be some significant upfront costs or need for a store location. But what you potentially choose to do here depends if you want to work full-time for yourself or just make extra income on the side. 7. Savings account, money market. You might not think this truly fits in, but this technology is still a basic income-producing asset. And this is especially true if you choose the right savings account or money market that gives you decent interest. If you want to protect yourself from the stock market, real estate, or other investing risks but still generate some income, these accounts are for you. The challenge here is the interest rates are quite low, so the return on your money is not great. But, your money is not at risk and you can quickly access the cash if needed. Some of these online banks are my favorites, but any bank with an interest rate above 1% will be pretty good. It's up to you which bank or money market account fits your current money needs. 8. Certificate of deposit, CDs. When I was younger, I had an older family member that used to give me savings bonds and encourage me to have CDs for my future. While years and years passed, the money that accrued was not groundbreaking. But, I did get interested on my money, which was then used for college expenses. CDs are safe income producing assets that are provided by banks. They work like a savings account, except you won't have access to the cash for a particular amount of time. You are basically just giving a personal loan to the bank for their use but will earn a set interest after a period of time. But with inflation rising and pending your CD length, you might actually not make much money. Something to consider if you are thinking about CDs. 9. Bonds. Investing in bonds is similar in a way to CDs. The difference here is instead of loaning the money to the bank, you are loaning it to governments or corporations. Many times you might be investing in various types of bonds in the stock market, which are safer investments to help balance your portfolio. And bonds are typically way more stable than stocks and have some guaranteed returns. However, they are smaller returns than, say, stocks. But remember, with safer investments usually comes lower returns. Here are a few of the types of income-producing bonds that exist. Corporate bonds, junk bonds, treasury bonds, municipal bonds. 10. REITs. If you've been a reader of this blog, you definitely have come across REITs before. REITs stand for our real estate investment trusts and are basically the mutual fund of real estate. Instead of owning rental properties or investing in real estate crowdfunding, these are funds that are operated by companies that own multiple real estate properties. The money used when you invest goes into the buying and the development of real estate. This income-producing asset helps you avoid the hassle of owning properties. It also diversifies your real estate into corporate buildings, apartments, hospitals, and more. And what's cool is that by law, these REITs have to distribute over 90% of their earnings to shareholders, which can generate some nice income for you. You can find these in your brokerage account as mutual funds or index funds, like Vanguard's VGSLX or their ETF called VNQ. There are also some private REITs, like Streitwise, which also offers some different diversification and risks. Thank you.